Ben ritrovati lunedì mattina sul floor del New York Stock Exchange, l'ultima settimana completa prima della pausa natalizia. In questo momento ancora indici sì nel territorio positivo, ma tanta incertezza, tanta cautela. Si guarda ancora a Washington e si continua a ignorare i dati economici. Ne parliamo con il mio ospite qui sul floor, come ogni lunedì è Mark Otto, che è Designated Market Maker per Night at Capital Americas. Mark, thank you so much for being with us again.
Oh, thanks for having me back.
So, Mark, I was just saying that this is the last full week before Christmas. Fiscal cliff is still dominating, apparently, because we had some economic data this morning and the market decided to ignore them again.
I think you're going to see that continued right through the end of the year. The fiscal cliff has really come to the forefront. They have countdown clocks going on everywhere. It's sort of like New Year's Eve here in the U.S. where you see that's only a one-day countdown. So it seems as though they are, negotiating. They are sort of coming to terms with, the deadline is nearing. So Republicans threw out there that they want to be able to tax only people that make $1 million or more a year. So if you're looking at it from a trader's perspective, I guess the bid ask is 250,000 to $1 million right now. So most people are predicting they're going to land somewhere in the middle.
Yeah, and it's a big range, so the negotiation can go on and on and on, as we know, is what is happening. Still, the recession fear is among the traders, and we can see that probably there is inaction because there is too much uncertainty. Do you think that we're going to see an entire week ignoring economic data again?
Well, there's a fair amount of economic data, particularly towards the end of this week, coming out. So we'll have to keep an eye on that. If it's going to sway the market, it's going to be on Thursday or Friday, particularly with the GDP numbers coming out. Personal income, personal consumption, personal spending, and durable goods towards the end of this week. So those are the key ones that we're going to be looking at. So if they're going to sway the market with macro data, it'll be on Thursday or Friday. However, over the past week or so, it's almost like a daily occurrence that a politician down in Washington comes out on camera and starts talking about developments with the fiscal cliff. And it really has swayed market momentum either way. So we'll have to keep an eye on both. But I really anticipate the fiscal cliff to really dictate the pace from here on to the end of the year.
And usually by this time of the year, a lot of economists, a lot of analysts, they try to predict what is going to happen the following year. And this year, more than other years, that it's very difficult. It's a very difficult task. Everything will depend on how the fiscal cliff goes, I guess.
Absolutely. I mean, it's funny to see that, this time of year, you're going to get people shooting really high or really low for next year. They have 12 months to go, right, after this. So you're right, though. I think that, it's determined on what happens with the fiscal cliff. If we go off the cliff, we'll be digging out of a recession. So that's really going to be, dictating the pace for the first at least 1 or 2 quarters into the next year for the U.S. anyway. It seems as though China is okay with slower growth. They seem to be more focused on restructuring. They're focused on, consumer spending versus exports. So that's going to be difficult. It's in the Chinese, culture for people to actually save. So 33% of their economy is actually consumer spending versus here where it's 2/3. So they're going to have their work cut out for them on that front. Japan seems to be, they have 200% GDP, but they've been off the radar simply because most people in Japan are very patriotic and they buy their bonds, so they keep their interest rates low. They had an election over the weekend. The Liberal Party won. It looks like they're going to try and do aggressive monetary easing. So there's a lot of developing situations, and of course you can't leave out the Eurozone. So we'll have to see.
So probably we can easily say that 2013 would be kind of like the same as this year in terms of who the players will be: China, Europe, United States.
Yes, absolutely. I think it's going to be a rocky road either way. The trend might be one way or the other. I guess most people are somewhat optimistic. I mean, indications are out of China that they are bottoming out right now. They are going to make the turn. No one's really said that they're anticipating aggressive growth going forward. So I think it's going to be a slower pace. I think it's not going to be this big swing of momentum one way or the other. So it's going to be a bumpy road for us all, I think.
And let's assume that we will not fall off the fiscal cliff. Where do you think the S&P 500 can end this year?
Wow, if I can make that call. Well, I'll use one of the smart guys that I speak to all the time. So Mark Newton at Grey Wolf, I'm still going with him. He's been optimistic that if they do get over the fiscal cliff, there's a possibility we're going to hit on the S&P 500 anyway. We're going to be looking at 1447, 1450, right in that wheelhouse towards the end of the year.
Well, let's hope so. We have just a few more days to go.
Absolutely, yes.
Thank you very much, Mark, for being with us.
My pleasure. Thanks.
E grazie a voi per l'attenzione. A domani.